All right, so we finally got some good news yesterday with the markets. Markets were actually up yesterday. I know it's been a while since we've seen an update in the markets, but some good news finally came through. Markets bounced back a little bit, and this was due to the fact that Trump had indicated that he actually might have some easing of his tariffs policies, especially the ones that he's really indicated that he wants to move forward with. He said, okay, maybe I'll take a step back and reconsider some of the tariff policies that we've been talking about these last few weeks and last few months. Overall, just gave the market a breath of fresh air and allowed it to percolate yesterday. And even this morning, the markets this morning opened a little flat, maybe a little bit down. And last I checked, it's about almost 10:30 now. And markets were actually slightly up, maybe about 15 to 20 basis points up. So things are definitely looking a little bit better than they have been. We know the market's been down these last few weeks, and it's been quite a bumpy ride. So this week is definitely a quieter week. There's not a whole lot of news to report on this week. However, some things that we can just keep in mind is that we're definitely not out of the woods yet. With policies still being very uncertain, we just know that the markets are going to need more time to sort of work through a lot of these issues, especially with some more uncertainty on the horizon. We still don't know what the Fed is planning to do in terms of a possible rate cut this year. They may or may not do a rate cut. I think it's really going to be very dependent on the data that comes out, especially towards the summertime. So if the inflation data continues to cool at their pace that they feel comfortable with, then they might go ahead and maybe do one rate cut, probably middle of the year, which of course is in the summer. If inflation data does not come back to support a rate cut decision, then the Fed will likely keep rates exactly where they are today. I don't think that rates will necessarily be raised by any means, but I think the chance of the Fed lowering rates, I think is maybe about 33%. I think the chance of them keeping rates as is about 66%. Again, this is just my speculation. So of course, take it with a grain of salt. This is not any indication of what's going to happen in the future. We never know what's going to happen in the future, but that's just where I think the likelihood currently is based off of the data that we're seeing. Now, in terms of domestic data still looks good. I mean, unemployment is still low. The labor market is still tight, which means strong. There's a high demand for labor. Still, it's hard to find good labor. So, which actually could be a good thing for federal employees at the moment. There's always a lot of change with federal employees, especially under a new regime. We saw this when Bill Clinton got elected. I mean, I think he eliminated something like 380,000 federal jobs. And at the time, the workforce was actually in high demand of labor. So a lot of those employees were able to quickly turn around and find jobs elsewhere, which was great. Same sort of thing now. I know there's been lots of talks on the federal level about budget cuts. And of course, with budget cuts, the largest expense that any company or organization has is typically payroll, right? So the first thing to cut with payroll is reducing that load, aka laying people off. So I know there have been increased talks and increased risks to a lot of federal employees about being laid off or them removing workers who are working from home or working remotely, and they want these folks to come back to the office, but for one reason or another, they just simply can't do that due to their location or whatever else the reason may be. With that in mind, I'm sure people have heard, especially if you are a federal employee, you definitely know what's been going on. The good news is that the labor market is still very tight, as I mentioned before. So it is likely that anyone who does get laid off will be able to quickly turn around and find a new job. I'm not saying that this is, of course, the ideal scenario, and it's not what we want for any of you. But if it does happen to a federal employee, then right now, how the markets are, there is a good chance they'll turn around and be able to find additional work, which is great for unemployment numbers. It's great for the sign of the economic health of the overall economy. We know the economy has been slowing down, but the labor market has still really held together very nicely, which is one of the big indicators of whether or not we're going into a recession. And that's what people have been talking a lot about recently. So I don't think that any potential layoffs on the federal employee side will lead to a unhealthy economy. It's just something that could potentially happen in the near-term future. The Trump administration also does need to keep in mind, because a lot of the tax laws are going to be expiring at the end of this year. under the Tax Cuts and Jobs Act. That act is actually going to completely sunset. So I do think that the current administration will do what they can to preserve a lot of the tax legislation, because right now tax rates historically are very low, and they're also very friendly to corporate America, right? If the Trump administration is implementing tariffs and then also implements higher taxes domestically, then a lot of companies may reconsider where they want to spend their money, especially in the United States. They might move their money elsewhere. They might do certain practices or implement certain strategies that limits the flow of dollars into their US-based businesses. They may flow them to European nations, Asian nations, anywhere else but the United States. And I'm sure the government is very aware of this, right? They want to remain competitive. They want to ensure that the economy stays healthy. I know the tariffs have been really the main talk, but there's a lot of other factors at play, and tax legislation, especially on businesses, is a very, very important factor to retain dollars within the United States. So if the US can remain very competitive and very tax friendly compared to other countries, then that'll be a good sign for businesses to want to continue to do business here domestically. So again, these are just things that are sort of on the horizon. Not a lot has really happened in the markets except for the good day yesterday. So there's not much to report there, but we're just sort of forward looking at this point in the conversation and saying, okay, what's likely to happen throughout the remainder of the year? And really the short answer here is there's definitely going to be some big decisions coming up on the horizon between the Fed and the federal government. We're definitely not out of the woods yet in terms of volatility, but it doesn't mean that we're necessarily heading into a recession. Again, I just think it's just some turbulent times we're in, to sort of summarize. And some key things to look out for are, what is the Fed going to do with interest rates, and what is the federal government going to do with their tax policies at the end of this year? So with that in mind, thank you so much for tuning in today, and I look forward to seeing everyone next week. Take care.